And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking, a Pan-African bank that's invested in your story because your story matters. Good evening. Welcome to The Money Show. I'm Stephen Grootes. A day again driven by, I suppose, comments, speculation, reports coming out of, what do I call it? Camp Trump, not quite Camp David just yet. We've been expecting, and it would appear for some time, the various reports have indicated that on the day Trump takes office, the US becomes the next US president for a second term, he would impose a whole raft of tariffs across a whole raft of countries, across a whole raft of industries. Instead, a report today is suggesting, in fact, no, it would be gradual, that the tariffs would go up sort of month by month. And that being one of the big factors which sort of really had an impact on European markets. At the same time, a very strong US dollar, almost as high as it's been at any time over the last 2 years. The rand holding its own mainly because of the tariff story. And all of that means that you get a very muddled picture. There's a lot of commentary on all of this. I read today in Reuters, they quoted research suggesting that if you look at all of the companies on the S&P 500 in the United States, so American companies on that particular index, 43% of their revenues, so 43% of revenues going to companies on the S&P 500 came from outside the United States. And what that really tells you is that there will be consequences upon consequences upon consequences for American policy going forward. And the dollar's very strong, imposed tariffs, all sorts of things will happen to the inflation picture, which is why bond yields are so high, and all of that is having a really big impact on the global economy. Talking of our economy, because all of this will impact our economy, Bloomberg suggesting, their panel of economists suggesting that our economy could grow by 1.7% this year. And I can't imagine how difficult it must be to try and make these predictions. There are lots of tables you can look at, but there's so many variables going into this year that it does just make it very, very difficult. And I don't know at what point the sort of noise or the Trump noise or the geopolitical risk noise comes to an end. I don't know if it does for a little while. And I think that really does make any kind of predictions quite difficult. Something our government can control, though, are certain regulations, like, for example, the fact that the VAT threshold for smaller businesses is 1 million rand a year. That's the turnover threshold. It's been like that for 16 years. I have to ask several questions. Was that really the intention when it was brought in, that it would be like that for 16 years? I mean, that really means that it's a very small company that would qualify and have to manage themselves under that threshold. All sorts of things happen when you have to register for VAT as a smaller company. I did wonder also, if you were going to think, who would be the champion? Who would be the person who would ride to the rescue of small businesses to try and reduce their compliance regulation, to try and reduce their sort of compliance headache? Well, it would be the Small Business Development Minister, wouldn't it? Stella Ndabeni-Abraham. Maybe she's been pushing for it behind the scenes, but I haven't heard anything from her on something like this. It was a story that broke on MoneyWeb this morning. I thought it was very, very interesting. I don't know if you're a small company involved in this. Someone brought it to my attention through email, Stephen at 702 today. One of the reasons you'll hear a bit more about it in about an hour from now. But good to hear from you on that on 011 8830 702 021 4460 567. And of course, voice notes this evening on 072 702 1702. Suggestions tonight as well that in fact Beijing might allow ByteDance to sell TikTok to Elon Musk. It already has huge influence, of course, through his ownership of X. But it does sort of tell you that capitalism in the United States, where politicians decide to ban a service, in this case TikTok, and then it gets sold to a friend of the American president who already owns something very similar, might just tell you something about the phase of capitalism the US might be moving into. Your thoughts tonight, 12 after 6.
702. Stephen is on The Money Show.
6 to 8 p.m.
A report this morning, the Public Investment Corporation now increasing its stake in Northam Platinum to 20%. It earlier accrued up to 15% of the platinum miner Sibanye-Stillwater. That's despite the really difficult position platinum miners have been in with low platinum prices, generally speaking, lower share prices as a result. I suppose the real story, though, may all be about expectations about whether hybrid cars or electric cars are going to prevail in the contest between them. Hybrid cars use more platinum than electric cars. Claude de Baissac is the founder and CEO at Eunomix. Claude, good evening to you. Nice to have you back on The Money Show. Is this a good bet by the PIC to invest more heavily in the platinum group metal sector?
Happy New Year to you and to your listeners and your team. Before I answer, I wanted to, what you said about the U.S. and geopolitics and the rapprochement between politics and capitalism in the U.S. You have to invite me to talk about this because I'm doing a lot of work on this, and it's big. The world of 2025 is going to be fundamentally changing what happens. The rules of the game are going to change. And so back onto platinum, that has a bearing on it, as a matter of fact, because we're getting some very, very conflicting signals about things like the energy transition from the United States, right? While China has been making enormous strides in green energy. And as we know, PGMs have an overwhelming attachment to the automotive sector. And as you said, there's been a lot of bearish feelings about it for quite a long time. But at the same time now, we're seeing some changes to that, right? The uptake in battery electric vehicles has kind of slowed down. Tremendous difficulties for battery operators in Europe and the US competing against Chinese. And I think clearly the industry has gone through a very difficult period, and in the process of restructuring, on bringing new mines online in South Africa. And the sentiment now is that that these companies are going to see the end of the darkness, and that there is some light, that the market is going into deficit in the PGM markets, and that it's not as easy and as cheap as we would want it to be to recycle. So the big story for me is going to be if you want, selling out and floating as an independent company of Anglo-American Platinum. They're doing the work. So, I wrote a long op-ed about PGMs a couple months ago, 3 months ago, where I said, look, what if South Africa plays its cards well, and the government, you spoke about regulations earlier, if government does its job well, then I think, the PGM industry still has some pretty good years ahead of itself.
So it all depends then for the moment. I mean, the medium term is all about hybrid cars and electric cars. I mean, I appreciate what you say about the problems regarding electric cars, but in the longer run, aren't electric cars more likely to prevail than hybrid cars? And doesn't that mean that perhaps this might be a good medium-term bet on platinum, but maybe not so much over the longer term?
Yeah, I tend to share your view. I think in the medium term, we have good reasons to be fairly bullish on PGMs, but not any PGMs and not any PGM companies, right? Those that are better positioned on the cost curve. And those that have more diversified portfolios of customers, because it's not just automotive, right? It's jewelry, but that's up and down. And then there's a lot of chemical applications. And obviously there is that whole questions of the hydrogen economy. And I don't think that particular battle is settled. And maybe it's not a battle. I do think that we are going to have very varied portfolios of energy systems that rely on different technologies. I mean, the battery electric vehicles don't work for trucks, right? They don't work for airplanes. They don't work for a lot of very large, very expensive equipment, ships, for instance. So, look, but as you said earlier, we can't predict what's going to happen in 10 years' time. I mean, we can't even predict what's going to happen in 2 years' time. So, a balanced portfolio, diversified with very robust balancing not just of the portfolio, the commodities, but also of the companies and the geographies where these companies are from, where they operate, where they sell. I think the key questions, we're going to have to start looking at the entire value chain, right? And where is that value chain located? Who controls it? We're going to go into the world of the geopolitics of global production and the value chains, and that's going to change everything we do from a policy standpoint to an investment standpoint to a corporate strategy standpoint,
I mean, that means playing our cards right. We still have a huge amount of platinum in South Africa. Some of it is in deep mines, but there might well be other deposits. We could do quite well in that could be a big selling point for us.
It is, and that's what my piece in Daily Maverick of a few months was saying is we have this incredible asset, right? And it hasn't been doing very well, and in large part because policy hasn't been particularly friendly. Yeah, there's been some issues with demand and pricing and all of that, but we know the mining sector in South Africa has been on a tremendous domestic, kind of own goal-driven issues, most of which coming straight out of government and the parastatals. The story that makes me weep is South Africa's gold story, right? Of course, the grades are lower and the depth is higher and the cost is. But if we had cheaper electricity, which we used to have, and we have the proper logistics, and we don't have red tape, and we don't have 3,000 licenses in the MRE waiting. We could still be a much better place in gold than we are now. A big player with some of the world's largest deposits. And that's what we mustn't do to platinum, right? We must do to PGMs whatever we can do to make sure that while we still have a market for this thing, it needs to be produced effectively. And instead of our industry trading water and permanently having to restructure because of rising costs in a very uncertain market. So the government really needs to catch a wake up, as Neil Frohman would say, and get the fundamental rights so that we can get the best out of that stuff.
Claude de Baissac, thanks very much indeed, founder and CEO at Eunomix.
WhatsApp Stephen
On 072
702
1702.
Well, with so many different dynamics underway that could affect our economy, you've already heard many of them about the US, about the commodity cycle. A prediction today from a panel of economists gathered by Bloomberg that our economy might grow at around 1.7% this year, slightly higher than in previous years, and obviously comes amid a sort of emerging narrative that our economy hasn't grown for a decade. Dr. Elna Moolman is the head of South African macroeconomic research at the Standard Bank Group. Elna, good evening. Good to talk to you on The Money Show. There's so many different variables to look at. I don't know what Trump's going to do about tariffs. There's geopolitical risk. Electricity probably not still a variable, but water provision will definitely be a variable. Amid all of that, is 1.7% a credible figure?
Good afternoon. So I think it's credible, but I think you've also alluded to the fact that it is still reasonably low. But what is important is that we're moving in the right direction. And this isn't just a cyclical improvement or a reaction to, say, interest rate cuts, etc. This is, in our view, part of an uptrend to above 2%. And I think that's the crux. And I think what we'll learn this year is exactly what the private sector's response is to all of these policy issues. We've seen the progress on electricity. We're making some progress on logistics. And then, of course, we have a different political environment. And I think this year we'll see how private sector companies actually respond to that. So we've seen their business confidence improve. We've seen their views on fixed investment improve. But this year we'll see whether they actually start to expand capital stock levels again, so more capacity, or whether it's more just treading water, taking advantage of these improvements, but not really taking the economy forward.
So then 1.7% this year would hopefully lead to higher growth than that next year. I mean, how long does this process take? I mean, is it possible then to give a figure of what next year would be if everything goes well? That's probably a big if.
It is indeed a big if. So we think that it will already be above 2% by next year. So we have a forecast of 2.1% and then gradually even better after that. So let's say 2.3% thereafter and on our way to 2.5%. Now, obviously that's not enough to address all of our problems. If we think here specifically about high levels of unemployment and poverty, and at the same time high levels of government debt. But it is at least enough for all of these metrics to stabilize. And what is important is that we think this is structural. It's saying we started several years ago with the electricity reforms, and we're now seeing the benefit of those reforms. And in our view, they're irreversible, and we think it's quite unlikely, we can never say never, but quite unlikely that we'll get significant bouts of load shedding again. And similarly on transportation, we think that, of course, the turnaround starts slow, and some of the structural reforms will take time, but we're already starting to see the first signs of improvement. And again, we think that in a year or two's time, those changes will be structural, they will be permanent and irreversible.
How important is politics to all of this? I don't mean American politics, I mean our politics. Presumably that would mean the National Coalition does need to stay in office, does need to keep working.
Politics is absolutely critical in all of this, but we also have to say that even without the government of national unity, there would likely have been some reforms. If we think about the electricity sector, for example, those reforms happened before the formation of the government of national unity. So it's not as if we can't have any progress or any improvements without the government of national unity, but we do think that this provides a better backdrop. It gives you that lift to business confidence to start buying into this and see these changes as permanent, and therefore to start expanding capacity.
Dr. Elna Moorman, thanks very much indeed. Head of South Africa Macroeconomic Research at the Standard Bank Group.
The Money Show.
The markets.
Ryan Heels, the head of fundamental sales at Absa CIB. Ryan, good evening. Thanks for coming in. Nice to see you in the new year. An astonishing day for MTN, ending the day up over 10%. I mean, what's driving that? Vodacom were up strongly too.
Yeah, thanks, Stephen. Good to see you again. So it appears to us as though one of the international research houses have gone out with a double upgrade on MTN. Recently, there was some news flow that suggested that we were going to see increased tariffs coming through in Nigeria. We still don't know what the quantum of those will be, but certainly in our own modeling, something like a 30% increase in tariffs will shift earnings for MTN by about 16%. So there was some news flow suggesting that the industry was looking for a 100% increase in tariffs. Point is that we're going to see some positive news come out of Nigeria fairly soon, it seems. And I suspect that it's on the back of this news that this broker upgrade has come through. And that's largely what has driven the massive increase we saw today for MTN's share price.
And their cell phone tariffs haven't gone up for years, so that's really the story.
Exactly. Margins have been massively squeezed in Nigeria. So, in fact, I think many investors probably have zero value for the MTN Nigeria business in their models. So clearly, if those tariff increases are coming through, it's going to be very positive.
Prosus and Naspers both up 1-2%. What's driving that?
Yeah, that was largely driven by what appears to be a bit of a relief rally bounce for Tencent in Hong Kong overnight. You might recall that last week there was some headlines suggesting that the US has put it on a list indicating that it could be identified as a Chinese military company. And of course, there was a sell-off on the back of that for Tencent. So the 2.5% price action that we saw in Hong Kong appears to have lifted Naspers and Prosus as well.
British American Tobacco down 2.5%. Reinet saying today it was going to sell most of its stake. British American Tobacco at one point was really crucial to Reinet. It was
Absolutely.
a very big stake, a very big part of their value.
Yeah. And clearly they've made a very good decision. I mean, that stake's now worth about £1 billion. So on the back of that exit of the shares, the share came under a bit of pressure. There was an accelerated book build, placing those shares quite successfully in the market. And Reinet itself, of course, ended up about 6% on the day as a consequence of this.
I imagine it doesn't really mean anything for the tobacco industry. This is sort of technical stuff.
Basically just a shift as far as the shareholders are concerned, the ultimate owners.
Kumba up 4%. It's been interesting to watch mining shares. We were talking about platinum a moment ago. Kumba obviously in iron ore, and of course all sorts of things going on in that sector.
Yeah, look, I mean, Kumba's been under pressure for months. So it's possible that it's found a bit of a flaw. There's some early evidence emerging that we're starting to see some momentum as far as house sales are concerned in China. And in fact, there is also some indication that we're seeing some positive momentum for iron ore pricing, which might explain why the stock ended up 4% today. But time will tell. Whether it's found a bottom yet, I think, we'll have to just watch this closely.
It does remind us, of course, how important China is to so many things. I mean, it's just part of the geopolitics.
Absolutely. And in fact, I think there are some global themes that one should perhaps pay close attention to this year. You've alluded to the Trump tariffs that could play out. Those will, of course, be inflationary. The strong US dollar is likely to continue having some momentum. Interestingly, the data on the dollar suggests that strong dollar tends to result in global growth weakening. So time will tell how that plays out. The China stimulus appears as though, that's possibly something that's going to play out in markets this year as well. I think they're trying to avoid the deflationary trends that are emerging there. And then, of course, global geopolitics will presumably continue to be on the radar screens this year, making markets interesting.
It was interesting that the dollar is so strong at the moment and that the rand seems to be recovering a little bit. And it is just a reminder of how everything is all connected to itself. And I made the point earlier that 43% of the revenues of companies on the S&P 500 come from outside the United States. A very strong dollar at some point is going to hurt them, surely.
Absolutely. And in fact, again, to the point, strong dollar historically, if you go back to data going all the way back to the 1960s, tends to weaken global growth because, of course, the rest of the world is basically finding it difficult to cope with the increasing prices that are coming through.
And then you throw tariffs on top of that, or just the uncertainty around tariffs, and that has a huge impact on everything.
Yeah, absolutely. Which potentially means that we might be in for a bit of a softer market. It's been a view that I've held for a while. Let's see, maybe it actually starts to play out this year.
Thank you very much indeed. Ryan Hills, Head of Fundamental Sales at ABSA CIB. We'll hear the view from Donald Mackay, Director at XA International Trade Advisors, about the latest on tariffs. So many different factors to consider when it comes to sort of tariffs and, of course, ahead of Donald Trump coming into office next week. And I don't know how many of the questions that are being posed at the moment he will actually answer in that first speech. He'll probably be too busy counting the crowd if his obsessions are to be well understood. Also talk a bit more about the possibility that TikTok might be sold, in fact, to Elon Musk. Don't forget, Warren Ingram will be with you for personal finance in about an hour from now. You with The Money Show, just gone 6:30.
The Money Show.
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
And DSTV channel 856.
Well, we'll be following up on that report from MoneyWeb in about half an hour from now about small businesses. The fact that the VAT threshold for small businesses hasn't changed in 16 years, 1 million rand a year. And if you consider the size of a company then and what a comparative company would be like now, and I suppose you'd have to do the inflation maths, but basically you're probably looking at around a company half the size from where it was in 2008 would now have to register for VAT or be registered for VAT. It really is an interesting story, and it also gets to the heart of questions around whether this is deliberate or whether it's just been sort of ignored, that really nothing's changed just because people have forgotten. No one's looked at it. I realize the folk at the National Treasury have an awful lot on their plate. There's a reason I don't work there. But I can't help but wonder where the Small Business Development Ministry is in all of this as well. Your views might well be affecting you, please. On 011 883 0702 021 446 0567 and voice notes tonight on 072 702 1702.
702 with Stephen Grootes.
Email him on stephen@702.co.za.
A report on Bloomberg this morning suggesting Chinese officials are considering allowing the company ByteDance to sell TikTok to Elon Musk. The main reason for that would be to avoid the impending ban in the United States. On Friday, the U.S. Supreme Court heard arguments in the case brought by ByteDance against the decision by the U.S. Congress to ban TikTok. Both Democrats and Republicans in the U.S. claim TikTok is owned by the Chinese government through ByteDance and is gathering information on Americans. Jan Vermeulen's the editor at My Broadband. Jan, good to talk to you again. I mean, a slightly curious report. I mean, yes, TikTok might be banned in the U.S., but to sell it to Elon Musk, I mean, would the Chinese government really want that?
They might want to, and good evening. They might want to, do whatever it takes to stay online in the United States, and this is one way to do it. It's, very similar, or not similar, but I'm thinking in a South African context of, for example, the deal between MultiChoice and Canal Plus that also needs a local ownership component. Who has the money to do that in South Africa? And so your pool is a bit larger in the United States than here, but it's not infinitely large. There's very few people in the United States with that kind of money. And so Musk is one, and then another was a former video game executive, Bobby Kotick, who threw his hat into the ring and said he might be willing to buy TikTok if it comes down to it.
There are different ways to look at this. And I mean, I've seen bits of commentary. I mean, some suggest that actually the Chinese could use this as a way to find a reconciliation with the United States, with Trump as the new president. I have to say, Jan, to put my critical hat on though, it would mean that US politicians, including Republicans, have voted to ban something. And
Yes.
as a result of that, it gets sold to the president's friend. I mean, that's not how capitalism is supposed to work.
Yeah, and honestly, I can't. I'm with you there. I can't not be critical of this because this is supposed to be the land of the free market, and here we are talking about being protectionist and about under the guise of national security, effectively banning something from operating in your country. So the immediate question is, how are you even going to do that? Because unlike a country like China, you don't have a great firewall because this is not what you do as a country. You don't ban stuff. You don't block stuff. You regulate, yes, and you sometimes have controls in place depending on the industry. Things like tobacco and alcohol and that sort and other sort of vice-based industries obviously need some kind of regulation. So that's just one example of where you would need that. But an internet company, a social media company, I mean, it's unheard of. And one can't help but wonder whether this is not actually about, and like listening to, for example, Mark Zuckerberg kind of saying the quiet part out loud on Joe Rogan's podcast, where the fact is American companies have been banned from operating in China for 4 years now.
Sure.
And whether what the United States wants here is not actually for this to be sold to Elon Musk, but for reciprocal agreement between the countries that will allow Facebook and Twitter and Google to operate with limited restrictions in China, under the same limited restrictions that China operates in the United States.
Well, that's not going to happen. I mean, free speech is, seen very differently in the United States and China, surely. And that's really the issue.
And exactly that. So because you've got that mismatch in values, you end up with a situation like this.
Mismatch in values, a very good way to put it. Okay, I mean, the claim by the Americans, or what the politicians have claimed, is that TikTok is getting information about Americans. Other apps do that too, of course. India's banned TikTok for other reasons. If the US banned TikTok, would it survive?
Yeah. I mean, TikTok is huge all over the world. It's not ideal. Obviously, the specific US company that was established for this would not survive. But the rest of TikTok elsewhere in the world would be fine. Definitely, I don't see the whole of TikTok collapsing. But yeah, I mean, the United States is not a trivial market, so it's not a market they want to lose. It's something they would fight to retain. But no, it's not going to be a situation where, you lose the United States, so South Africa loses access to TikTok because it has to shut down here too.
So then, obviously, there would be space for a competitor for TikTok in the United States, right? And short-form videos, not hard to create a platform to put them on. It's basically YouTube, but in a different way.
In fact, that's exactly what they've done. YouTube has launched exactly this to compete against TikTok.
But what they wouldn't have for the moment is the scale. And isn't that really the problem? Is that because it's so many short duration videos, you need so many of them and you need so many users, and it's much cheaper to do that around the world with one platform rather than having different platforms in different places.
It's a tricky one, right? So on paper, I don't see why YouTube couldn't do it. YouTube is just massive. It just dwarfs TikTok in scale. So why not? But these other platforms have tried and they've not succeeded in just crushing TikTok. And so, one has to ask why. What does TikTok get right? And, this raises then questions about the character of a social network, the type of audience that it attracts in the first place, and the type of creator that it attracts in the first place. But then also, perhaps just around mechanical things, like the tooling that's available on TikTok. TikTok had at its beginning in a lip-syncing app, essentially. You play a piece of music and you lip-sync to it. And that stuff still happens all over the app. It's something that the user base does together as part of the fun, and they dance. They've got these choreographed dances that everybody copies and does all over the world, and they lip sync to songs. But then it also has pretty powerful remixing tools. So where you have like a whole sub-genre of TikTok where you have these a cappella singers that riff off of each other and create together. And TikTok has a bunch of these tools that are kind of stacked together and stitched together that enables creators to do that. And I can't help but wonder if that mix, like it's got this perfect magical mix that has allowed it to survive in the same way that Snapchat has been able to survive in the face of an onslaught by Facebook.
Jan Vermeulen, thank you very much indeed. Really appreciate it. Editor of mybroadband.co.za.
702. Stephen is on X.
At Stephen Grootes.
Well, evidence again today of how Donald Trump is moving markets. He only takes the oath next week. European shares up on the day. Other emerging market currencies slightly stronger, including the rand, I'm happy to say, because of a report that Trump's team would consider instituting tariffs gradually once he comes into power. In other words, according to this report, tariffs would increase sort of month by month. As you know, Trump has promised to impose tariffs the moment he comes into the White House. What does all of this mean for markets? Is it possible to know what he's actually going to do? Donald Mackay is the CEO at XA Global Trade Advisors. Donald, good evening to you. I imagine an awful lot going through your desk at the moment on this. Is it possible to have any idea at this stage as to what Trump's actually going to do once he takes office next week?
I have no idea what is actually going to happen. There are so many conflicting messages coming out of Trump's own mouth that it's very, very difficult to predict what will happen in reality.
It would seem to me, and I do have my cynical hat on today, that if you consider how different the reports are, and they come from reputable media organizations, it would seem almost deliberate. I mean, either there are people in his team with very strong views and they're arguing amongst each other, or he's trying to sort of set the ground for something. In other words, he is deliberately trying to keep people guessing.
Yeah, I think it's probably more of the latter. I just don't know what he's trying to accomplish with all of this. So if he is setting something up, what is the setup? What is he wanting? That is not clear to me at all.
I would imagine there will be different consequences or a different scale of consequences depending on how he does things. If he comes in and announces tariffs at a very high level, all imposed in many different places, all at the same time immediately, there would be a shock. If he were to do things gradually, there would be a different consequence. Do you think there will be very different consequences, or does the scale at which he does things not really matter? I mean, obviously, the amount of the tariff, the percentage of the tariff, will be really important.
Yeah, so I do think they're different. The way Trump is approaching this, which appears to really be a tax on the whole world, if he were to do that kind of, whether gradually or rapidly, that would reflect in the currency. So there's a part of me that thinks if he were to do that, if countries which have floating currencies like ours just kind of allowed them to react to it, we would just reach a new equilibrium. The duty would largely be ineffective. Yes, our rand might depreciate a little bit in that process, but life would go on. I think the bigger question to me is what do you want to accomplish with this? So Trump is doing something here that appears to have no connection at all to the domestic production of things. So it appears to just be a hammer that he's using to beat anyone that he doesn't like or even those that he does like. And that's incredibly unusual. Tariffs are not usually used this way. So if he were to impose these duties, it's not as if the American consumer of these products has a local equivalent they can purchase. It's simply a tax on the American consumer that appears to accomplish nothing at all.
And of course, it depends on how it's done. I mean, there's the wonderful example of cars. They might be made by General Motors, but they're assembled in Mexico, sold in the United States, and essentially involve components from all over the world. In fact, as has been discussed on this show before, some components will go back and forth across the border 10 or 12 times before the car is actually manufactured. What I'm trying to get to is the definition of which product actually attracts a tariff is incredibly messy.
Yeah, no, it absolutely is. So if Trump is to be taken at his word, which I guess is a dangerous thing, but if he is to be taken at his word, these appear to be blanket tariffs, which means It would hit raw material supplies, which would make the manufacturer, in your example of become more expensive. If the car is moving, or the half-built car is moving over the border a few times, is it being taxed every time it crosses? It's all very confusing. And of course, the agreement in North America that kind of holds all of that together, which was updated by Trump, appears at this point to be slowly being dismantled by Trump. So again, not clear what the end game is here.
Just the statements and the noise that has come out about this in the last few weeks. So in other words, everything that's been said before he even takes office. Has that had an impact one way or another on global trade? I mean, I recall a report towards the end of last year that Chinese producers had been pushing as much through their ports as they could to get it into North America before they could attract tariffs, for example. I would imagine in some cases people have changed their behavior just on the threat of tariffs.
Yes, but if you think about that, you can kind of do that for the next shipment or two, and then what? You're going to have to deal with the reality. So yes, there will be a short-term bubble as more product, people try to get it into the US as quickly as possible. But the minute that stock is used up, you still have to confront it. So I would think, yes, it is disruptive. But the much bigger disruption is what happens afterwards. You know, if you're living with these duties for the next 4 years, that would require whole reconsideration of what a market looks like. Is the US a viable market? And if we look at countries like China, they've been preparing for this. So China is simply less dependent on the US than in 2018 when the US first imposed or started the trade war in 2018. So China has simply diversified to reduce that risk. And so any action by the US against China would simply have a smaller effect because China has less dependence on the US market.
And presumably, I mean, in Beijing, they would be essentially forced to respond to Trump based on what he does. In other words, if he imposes a large range of very high tariffs, they'll do exactly the same thing, and I presume very quickly.
Yes, I would think so. I mean, none of this will be a surprise anymore. So I've got to think the trading partners, not only in Beijing, but also in Brussels and in Canberra, etc., have been thinking about what to do if all of this happens. They've had years to plan for it. No one's going to get caught unawares. So I think whatever happens, retaliation will be swift and very cleverly thought out.
And I presume for us in South Africa, almost no matter what happens, if this is what Trump does do, then everything's just going to be a bit more expensive. In other words, not just American inflation, but perhaps global inflation.
Oh, you know, that's interesting because I've been thinking about that, Stephen. It's not that clear to me that happens. So I'll give you an example of this. Particularly if China gets hit harder than the rest. There are lots of products that China produces that we don't manufacture, but which the US might be taxing. Those goods would be looking for other markets. The prices on those goods may actually be dropping into countries like ourselves. You know, if you look, for example, at the issue of electric vehicles in South Africa, where the idea, as far as I understand it, is we need to get 5% of the cars on the road to be electric vehicles before anyone really wants to look at setting up production in South Africa. With the markets in Europe and the US closing, and the fact that we don't have any electric vehicle production in South Africa at the moment, this might be an opportunity to say thank you to the Chinese taxpayer for all of their subsidies. This may be an opportunity for us to drive up consumption of cheap electric vehicles, and it's cheap because these other big markets have been closed off and they're essentially looking to dump their product somewhere. But given that we don't have competing manufacturers here, that's just a gift from China in that case. So there may be opportunities if we think about the problem a little bit differently.
Donald, thank you very much indeed. Thought-provoking. Donald Mackay is the CEO at XA Global Trade Advisors. I guess we'll find out from around early next week sometime.
7:02.
7:02.
Stephen is on The Money Show.
6 to 8 p.m.
When you're running a small business, I often wonder what impact compliance has on you. Just managing all of the regulation, all of the documentation, some of it's very important. One of the big promises that we've heard from government over the years is to basically make life easier for small businesses. And there are two easy ways it could do that. One is reduce the amount of regulation you have to comply with. The second is to make sure all government departments actually pay small businesses on time within 30 days. Basically remove cash flow problems sort of from their desk would really be the issue. And so often we hear that that doesn't happen. We'll talk a bit more about this in the next few moments. We'll talk about the VAT threshold and the impact that that might be having on companies. 16 years ago, the current tax threshold was imposed. Don't forget personal finance with Warren Ingram as well. You with The Money Show. Good evening.
And now, The Money Show.
With Stephen Grootes on 7:02.
Let's walk the talk.
Good to have you along with us this evening for the second hour of The Money Show. Just a reminder, good to hear from you. 011 883 0702 021 446 0567, especially if you've been affected by the VAT threshold issue. We're going to talk about that in just a moment. Don't forget, Dr. Rutendo Hundwingwi will update you on what's happening on our continent in the next little while as well. Business opportunities, of course, in various places. Lots of conversations to have there. Warren Ingram will be talking about how to finance overseas. How to invest overseas, I should say. Some interesting questions. I mean, the investment picture is so difficult at the moment, partly because of what's happening in the United States at the moment. It does mean that there's a lot more geopolitical risk. You don't really know what's going to happen. All of those issues we'll talk about with Warren Ingram this evening. Nice to have you along tonight, 9 minutes now after 7.
7:02.
7:02.
Stephen is on X.
At Stephen Grootes.
A reminder on MoneyWeb this morning that the compulsory threshold at which companies have to register for VAT has remained at a turnover of 1 million rand for the last 16 years. In other words, when this threshold was last set at 1 million rand, or first set at 1 million rand, we were only in our first year of load shedding. This leads to questions, I suppose, about whether this is placing an unnecessary compliance burden on smaller firms. And of course, the government has said many, many times it wants a lot more small companies to get started in our economy. Charles de Wet is a tax executive at ENS. Charles, good evening. When the threshold was first set at 1 million rand, was it thought that it would stay at that level for such a long time?
No, Stephen. It's something that should be increased relatively often. I mean, I don't think that there's ever been an expectation that it would increase every year. But 2009 to 2025 is a very long time. If you think that inflation has been sort of more than 5% on average over that period, so it's definitely time for it to change.
Presumably then, many more companies are now registered for VAT than would have been otherwise. In other words, the size of a company that would have had to register back in 2009 might be X. If you look at inflation over that time, possibly a company half that size now has to be registered.
I agree with that completely. You know, if you use sort of the inflation rates, and you know what it was at that, you know, 1 million rand in 2009, and you just increase it by the inflation rate to today, it gets you to nearly 2.3 million rand. I mean, interestingly enough, you know, something that is adjusted every single year are the tax rates for individuals, and the tax threshold, so the level at which individuals under 65 started paying tax was 46,000 in 2009, and for 2025, it's in fact 95,000 rand. So it's also doubled in that size. So your point about, you know, the size of the business comparatively, it's a business that is half the size now that has got the compliance burden that a business had 15 years ago.
Does SARS benefit much from keeping it like this, from not making a change?
I don't think that they do at all. There's, you know, in the services industry, I mean, there's likely a little bit of an impact there. So, you know, in circumstances where you provide services to individuals that cannot claim the input tax because they're the final consumer, you know, in those circumstances, I mean, there would be, you know, sort of an increase in a little bit more tax that is collected in the in the circumstances, but I had to be a very small component of the economy on goods, etc. The market wouldn't have a significant impact at all. So I don't think it really has a revenue impact. What it does have, though, is a very big compliance burden for SARS, both in terms of the registration process, in terms of also then accepting returns and doing verification letters and sort of creating for fraud. So you would always think that that SARS would want the threshold to be higher, and then for small businesses have got enough compliance to deal with without including VAT on it if there's no real need for them to be in the VAT net.
Whose responsibility would it normally be to sort of look at this on an annual basis or semi-annual, every now and then? Would it be SARS? Would it be the National Treasury? Would it be the Finance Minister? Something that would be announced in the budget, I suppose?
So typically it would be the National Treasury who would then make recommendations to the Minister to include in his budget speech. During the public workshop last year, it was something that came up again. I mean, so one would have expected that it's a relatively straightforward amendment to make it, changing the number. It's not difficult to do a calculation. I don't think that there needs to be significant, research work done in terms of getting to a reasonable number in the circumstances. But for some reason, it's not something that is changed often. So you often see across all the tax acts that the different numbers, the thresholds that are included, seldom get increased, as I say, except for the disabled for individuals.
Charles de Vet, thanks very much indeed. Tax executive at ENS. Listening to that, Tebogo Klaas is the global chief entrepreneur at the Institute of Chartered Entrepreneurs, an expert, as you know, in small business. Tebogo, good evening to you. I mean, how big an issue is this for smaller businesses that so many have to be registered for VAT when they're really quite small?
Good evening, Stephen. You're quite right. And the compliance burden, the regulatory burden that is being imposed on small business and entrepreneurs itself, it's something that really is of concern. And there is a need to actually transform the VAT compliance landscape. But we don't believe what has been proposed through the article that we've seen through MoneyWeb, which you referred to, is a way to go. And I'll tell you why. While these arguments may be well-intentioned, there is overlooking deeper structural reforms needed in our tax compliance framework. And instead of adjusting thresholds in isolation, we need to reimagine the VAT compliance system by leveraging modern technology and future-proofing, to address inefficiencies in the system. That will help mitigate fraud and ensure equitable compliance across the board.
So in other words, we should take this moment and use it to do a wholesale reform, not just change a number.
Absolutely. In fact, scrap it. Scrap the minimum, the threshold. Make sure that every legitimately registered and trading business that is on the CIPC system, that is active, remember the keyword active, that is trading, is registered and required to make sure that it complies with tax regulations. And it can be done seamlessly using a blockchain technology, Stephen. We just need to reclaim the framework. And that you start with the current, you focus on the current 1 million threshold, those who are currently targeted by that, and make sure that as time goes, once this has been refined, it can actually be opened up to make sure that everybody else gets to be compliant with that, obligations.
I would think, sort of looking at this, the people who would be shouting up and down, and jumping up and down and shouting for small business, the people who would want to change, the people who would want to make it easier for small businesses, the people who would be their champion, going to the National Treasury, knocking on the door, would be the Minister of Small Business Development, Stella Ndabeni-Abrahams. Is there any evidence that she's doing that?
I must be measured in how I respond, Stephen, unless I get blocked again on my mobile phone by the powers that be. But certainly we would have wished to hear more from the ministry insofar as vexing issues such as this one, where we need more proactive interventions that seek to also take advantage of the prevailing tech environment that could enable the seamless compliance with regards to that compliances, and that we don't see in the department. And funny enough, even the Department of Trading of Digital Technology could also be a party. But even efforts to reach out to this department, I have personally done it, have been met with a death of silence from both departments, and I've got the receipts for that going back from last year. So we really have got a government that seems to be speaking with both sides of its mouth. It's saying one thing, but doing the other thing. We're hoping that with the advent of the GNU, things will improve. But now, even the idea of introducing a blockchain to manage VAT compliances or VAT transactions may be something that may just be a pipe dream insofar as this is concerned. But we believe that will be the solution. That will not only future-proof the system, but ensure that actually the tax base, which is currently eroding, is actually expanded. And it will eliminate fraud, corruption, and make sure that we actually foster ethical entrepreneurship.
Tebogo Khas, thank you very much indeed. Thought-provoking. Global Chief Entrepreneur at the Institute of Chartered Entrepreneurs. Well, interesting to just hear views on this. Have you been affected by this as a small company? If this is something that you're sort of dealing with on a daily basis, the kind of regulation, I'd be really intrigued to hear from you. As you know, a government does speak fairly often about the need to promote and its desire to promote small businesses. Is that what you're finding is actually happening? Be very keen to hear from you on that. 18 minutes after 7.
The Money Show on 702.
Monday to Friday, 6 to 8 p.m.
Time to find out what's happening on our continent. Dr. Rutendo Hundingwi is the founding director at Tribe Africa Advisory, also author of the book Rumble in the Jungle Reloaded. Rutendo, nice to see you.
Always pleasure, Stephen. How are you?
I'm well, thank you. You say that because you only have to see me once a week. So Kenya Airways, they're back on the Nairobi Stock Exchange. It seems investors are quite pleased with that.
Yeah, and just to give a brief history of Kenyan Airways, why it's actually a big thing for them coming back on the Kenyan Stock Exchange is probably 10 years ago, they had to pull out, and what had happened, they got a loan from the US Export-Import Bank for about $856 million just to bolster them. And at the same time, I think they were targeting to buy about 9 different planes with regards to their fleet. As we know, Kenya is quite established in the region and was making big inroads on the aviation front. And because of that, they got a loan, and $525 million it was guaranteed by the bank. Then COVID hit. So you had obviously a big loan from the US, COVID hit, and it just derailed them from an operational cost perspective. And because of that, they delisted from the stock exchange, which in itself was a big thing because there are very few companies on the aviation front in Africa that are actually listed as the main airlines on the stock exchange. So for them to come back on, there's a lot of hype around it. I think the market capitalization they're looking at is about $193 million. Kenya is quite a strategic player in the East African space, and they've got the backing of the government. President Ruto is trying to put in some right things. I think this is one of the good things that he's doing. So it'll be good to see how the story actually plays out, because we know that region is quite competitive, and in terms of making themselves a hub of the continent, and I'm talking about Rwanda, Ethiopia. So this is quite a good story to follow through in terms of what actually comes out of it, Steve.
It's interesting because I understand that the government has said it would be happy to cede ownership to a private investor. It reminds me of a government slightly closer to home with SAA and the Takatso consortium deal that, I mean, it seemed was going to happen, and then didn't.
It didn't happen.
Very, very interesting to see that a government is happy to cede ownership if the right bidder comes along.
Yeah, and I think it's a sign of what can happen when the private sector and the public sector work together. And I think you probably agree with me, Stephen. Probably even going back 20 years, Kenya was one of the leading best quality airlines on the continent. And very few people actually knew that it wasn't a state-owned entity. It was a listed, government had large shareholding in it. So it actually shows that if the right mindset is there, the leadership is there, and the platform is established properly between the private and the public sector, these things can work. So hopefully they'll come out of the doldrum that they've been in, and we'll see another growth of a strong airline, very competitive on the African market.
In Namibia, produce all sorts of things, but there was going to be a huge amount of money we thought would come from a discovery from oil. But Shell's writing down that by $400 million.
$400 million is not pocket change in my world or your world, Stephen, and that's true. So Namibia Oil, Shell had done a major investment in Namibia, and as you are aware, Stephen, what usually happens is that they do their feasibility test, which is obviously the paperwork, and then they do the exploratory work. And out of this, they injected plus or minus $400 million US. And because of the surface and I think challenges of gas and a lot of instability, they've had to write that off in terms of that investment. So it was a bit of a scare, not only for the investors themselves, but for the government. But there are other players that have, I think, the block of land or the block of sea that they've assigned in terms of doing the research is called PEL 39. So it's quite a significant section, but I think there's several other components that are there. So it's not a total write-off. But I think the key thing that sticks out here, Stephen, is that the cost of drilling for oil in the African countries or in any emerging market, the costs are quite high, and we underestimate the write-offs that actually happen here. And just to give you an indication, Shell was doing a similar project or exploratory work in Colombia, in South America, and that was their wrote of $300 million US. So there's a lot of money spent before that oil actually comes out of the ground and ends up in my fuel tank or your fuel tank, Stephen.
I mean, I see one of the problems is that the rock has a lower permeability. In other words, we're talking about natural factors here. Some parts of the world it is easier to drill than in others.
Yeah, it is. And remember, Shell is a seasoned company. I mean, it's a multinational that has been doing this for but decades of years. And they've got the expertise. But I think it also talks to the issue of risk, Stephen. And when you're looking at this kind of commodities and the level of investment that you have to make, and I think that's why multinationals, when they come into invest into Africa, they need to make sure that the regulatory framework, the commitment from government is adequate for them to be able to do this kind of investments. And if they have to write off, because it's not anybody's fault, they've got assurance that they've still got the runway to do further investments or look at further opportunities. And Shell, obviously an English company, but you've got the Portuguese in there as well, and the Italians also invest in Namibia. So Namibia at the moment, obviously they've just come out of the elections. They've got a new leader. But I think there's a lot going for them, for a country like that, with investments that they're making. And they're having a GDP growth of plus or minus 4% per annum. So I think they're on the right track, all things remaining equal.
Ethiopia opening a stock exchange on Friday for the first time in a long time. I hadn't realized they didn't have one.
So Ethiopia, again, a lot of things happening there. But just to look at the history of Ethiopia in terms of why this is a big thing and the number of things that have happened in Ethiopia that I also talked to in the last year. But I think going back to the 1960s, 1970s, they actually had a stock exchange, and they were under the monarchy rule at the time. A militant group came and overtook them and turned that over. And as part of the socialist mindset, they said, no, look, no more of an open market. We're going to close this market, and that was the end of the stock exchange. Obviously, President Abiy Ahmed has come in, and he's got a lot of he's opening up the economy, and one of the things that he's doing now is that he's opened up the stock exchange and restarted that. I think they did it on Friday. I don't know if you got the invite card.
Strangely, no.
Neither did I. But they've opened up, and they expect to trade probably about 90 companies on that stock exchange. They've invited a number of people for that ceremony. And I think the amount of capital since when they sort of started listing is about 1.1 billion that's flowing through already. So a lot of excitement. The one company that's registered is Wigagan Bank, which is also a big thing because Ethiopia didn't have a private bank sector. So that's another big thing. And the next big company that's going to list apparently is Ethio Telecom. So those are two big things, the financial sector as well as the telecom sector driving growth on the market. So why I say this is amongst a number of other things, Stephen, is bear in mind as well that they've recently floated the birr, their currency. They've also put tariffs in place that you can't import diesel and petrol cars because they want to go clean. So a number of exciting things bold steps that he's putting in place in terms of making a change in the region. So it'll be interesting to see how this stock exchange takes the country to another level.
And then the Central Bank of Nigeria is making it easier for Nigerians living abroad to essentially send money home. And I mean, remittances are a very important source of income for a lot of people.
It is. And remittances, we underestimate the quantum of remittances in Africa, Stephen. And just to give you some more context into that, I think it's estimated per year $100 billion of remittances come from the African diaspora. So that's a quarter of South Africans' GDP, just to give context. And 20.5 billion of that, so that's 20% of it, is purely Nigerian remittances coming to Nigeria. And that's been the average for the last 10 years. So the challenge with remittances is that, I also send back money home, not $20.5 billion, but hopefully one day, if wishes or horses are
Zim dollars.
Zim dollars, in Zim dollars, I'll get there. But I think what this just talks to, Stephen, at a broader extent, is that there's a lot of capital out there that can make a huge impact into the African market if given the right framework. So what the Nigerian Central Bank, what they've done, they've put two instruments in place with regards to accommodating this. And one is, out of simplicity, is a savings account. So people in the diaspora can send through their money, and it's saved through the banks in Nigeria. And then the other thing is an investment account that the diaspora can do. But the good side of this is that once that money is coming through these instruments, which are all legit, and it's not coming through the black market or any other parallel market, the advantage that is there, Stephen, that it actually allows the countries themselves to use this money and use the investments to develop the country. So I'm quite excited about this. I think it's a big thing, having these kind of investments, but more importantly, having instruments like this. And Stephen, I think a number of times we've talked to Nigeria, there are a number of things that are happening. Obviously, there were the strikes that happened with the youth 6 months ago. And there were a number of other challenges that are happening. But when you see instruments like this for a populous country like Nigeria, what it means to the economy, what it means to the just from an investment perspective, the diaspora is a platform that can make significant contribution in terms of investment instruments for Africa. So looking forward to see how this all prevails.
Dr. Otendo Ndungwi, thank you. Founding Director at Tribe Africa Advisory, author of Rumble in the Jungle Reloaded. Do appreciate that. Interesting to see how things are changing in certain places. I mean, the idea of an Ethiopian stock exchange, the fact they didn't have one, and why the previous one was banned back in the 1970s, just ahead of the Ethiopian famine, I'm sure, really does tell you what was going on. It really is a very, very interesting thing to look at. In a moment, Warren Ingram will be guiding you through investing your money in other countries. Really? You want to take it to the US now? Okay, 7:30.
The Money Show.
Personal Finance with Warren Ingram.
Warren Ingram, of course, a certified financial planner at Galileo Capital. Warren, good evening. Nice to talk to you again. Discussing this evening the best ways to invest money overseas. And I suppose one of the first questions we would have to ask is why you would want to do that. And knowing you as I do, I'm sure your answer will be to diversify.
There we go, Stephen. It's a whole universe in one word: diversification. And I think it's true, but maybe just to elaborate a little on that, when you look at the South African Stock Exchange, you would see a bunch of companies that are, I mean, most of them I think are actually extremely well run, but there is a large focus on banks, on insurance companies, mining houses, and then a few other businesses around that. But what you won't see, for example, is a big tech platform, like a Meta or a X or something like that. You also won't see, a massive global biotech business that's developing medicines for today and for the future, and then a host of other companies that that are maybe changing the way we do things, and might be changing the future. And most of those companies are listed in places like the US, like Switzerland, the UK, and right across to China. And so I think diversification is also about having access to companies that that offer opportunities we can't get on the South African market. So I think that's one big reason, but also accessing countries that have different interest rate markets. So for example, being able to buy bonds in Brazil if you really wanted to do that, or being able to buy a money market unit trust in Switzerland if you just want absolute safety. So there are a whole range of investments that you can access that look very different to what we can get in South Africa. And I always think when we talk about this, people tend to be a little bit binary. They go, we either invest in South Africa or we invest overseas. And if you're investing overseas, it's not patriotic, or it's a call on the future of South Africa. And I think those are truly rubbish arguments. When you're investing, I think if you live in this country, if you live in South Africa and you're going to spend rands for the majority of your life, you certainly need a significant portion of your money in the country and invested here. But at the same time, you always want the opportunity to benefit from economies and markets that perform differently and also at different times to the JSE. And hopefully, over a very long period of time, if you do that, then you get to the situation where 1 + 1 = 2.25, and that quarter is free because that's what comes from diversification.
I like the way that you put that. For a lot of us, when you start and you want to do something slightly new, you start with a sort of small monthly payment. Quite difficult to do that overseas.
Absolutely. And I think it's one of the myths now. In the past, when the opportunity to invest overseas first opened up to South Africans, and that's way back when I still had all my hair, it was really kind of an opportunity for people with a lot of money, and I think for a lot of South Africans that sense of elitism still applies, and I think that's not true anymore. You can really access global investments with a monthly debit order now, and it could be as much as or I should say as small as 500 Rand or a lump sum of 1,000 Rand. And so understanding that access to global investments is a lot more democratized than it's ever been before. And most of us, when we start investing, we're not going to have 5 or 10 or 100 million Rand lying around. What we're going to have is a couple of 100 or a couple of 1,000 Rand a month. And then I think understanding that you can actually take that money and invest in global markets. And for a lot of us, that we might access those global investments from investments with a terrible name. They're called feeder funds, and it's not because they're going to eat all your money away. It's because you take your Rand investment and you feed it into global markets, and you can do that via a unit trust or an exchange traded fund. And what will happen is, let's say you choose a world index. You'll put your money in Rands into a unit trust or an exchange traded fund, and that product will then go and buy the world index on your behalf. And so what will happen is, if the world stock markets do well, you'll benefit from the growth of the world stock markets. And then if you put your money out and it's whatever it is, let's say 19 Rand to the dollar today, and in 5 years' time it's 25 Rand to the dollar, then you'll also benefit from the depreciation of the Rand. If the Rand goes from 19 to 14 in 5 years' time, then you will lose on the value of the exchange rate actually strengthening. But the point is, you get the diversification of exposing your money to global markets and then hedging the Rand out against the dollar or the pound or the euro, whatever your choice is. The key there, Stephen, is when you decide to access that money again, so you say, now I need to draw some of it or all of it back, you're not going to be able to pay that into a bank account in Switzerland or in the UK or in the US. It's going to be paid to your South African bank account in good old South African Rands. So it is a way of getting good investment diversification, but it's certainly not a way to go and spend your pounds and dollars overseas. You won't be able to do that.
Okay. When you invest in these funds, do they cover the whole world, or are they really sort of kind of Western based? And I imagine the big focus on America at the moment. Would you get exposure to China as well, is what I'm asking?
So this is where we're now exposed to an absolute world of choice. We can choose, for example, a world index, and the world index will measure the value of all of the big stock markets around the world, and so and give it the weight accordingly. So if the American stock market happens to be the biggest part of the world stock markets, and let's say it's worth 70% of all world markets, then when you invest, you're going to get a major US exposure, and then you'll get the relative values of the UK stock exchange and European, all the way through to China. And an index like that, I've been talking about the world index, but the one that you would look for in that instance is called the all country world index, because then it is what it says on the box. It covers all the countries in the world. You can also decide, I'm going to choose an investment that's got a specific focus, for example, only on Asia, or only on emerging markets, or only on Europe. So you do have a significant choice when you make these investment decisions. And equally, you might decide to choose a unit trust, which is global, and the fund manager that you select might say, we believe there is real opportunity in China and in India and maybe in Europe, and we think there is much less opportunity in the US, and then your exposure might be a lot less to the US. And then lastly, you might be, rolling the dice, and I'm using those words on purpose, and saying, well, I'm actually going to put all of my, feeder fund exposure into US tech shares because I don't think they're expensive enough. I think they're going to get a lot more expensive. I hope people don't make that as their only investment decision for overseas, but they can do that. There is the choice.
A lot of it is also about how you do it. So we've been talking about sort of smaller monthly amounts, but you can also invest larger lump sums as well. It could be a bonus, could be you save up for it, could be from the sale of a house, something like that. Is that a bit easier?
I guess I'm hesitating in my answer because it could be easier and it could be a lot more complex. I think just to explain the difference, what happened quite a few years ago was that SARS said there is this thing called the travel allowance, and a lot of people were using some of their travel allowance to actually allocate money overseas, and often just in bank accounts, etc. And then they weren't really reporting those assets back to SARS, so it made things quite messy. And SARS was very pragmatic to say, we're going to now increase that allowance, and it's now at the moment R1 million a year, and we're going to call that your discretionary allowance, your annual discretionary allowance. So you can use that, some or all of that money to travel if that's what you want to do. You can use that money to buy goods overseas and bring them into South Africa, and you can also use that money to invest overseas. And what will happen is you don't need to apply to SARS for special permission or anything. You can simply use your South African bank or your South African foreign exchange dealer. They will then note that you've sent the money out, so they keep track that you're not doing more than R1 million a year, but you don't need permission. You can simply do it. And if you are investing, what's important to remember is that money doesn't simply disappear off your balance sheet, and SARS doesn't simply forget about it. They're going to find out about it because the foreign exchange dealers have noted it. So it will become part of your assets, and in future you would report those to SARS. So that's a fairly easy process to follow, and we can do R1 million per year without asking for permission. Just be careful that you don't do R1 million at the start of the year and then remember that actually you needed to spend 100,000 of that money on travel because now you're going to exceed your allowance. And so that's a problem you don't want to fall into. But if you do have a large amount of money, more than R1 million, you can apply to SARS to get an allowance to send up to R10 million per 12-month period. So it could be, the end of February to the beginning of March next year, or it could be the end of June to the beginning of July next year. It doesn't matter, but you can send R10 million per year. It's a slightly more tricky process because now you're asking SARS for permission to send that money out. And one of the things they're going to check is, are you a taxpayer in good standing? So have you done all of your necessary taxes? And secondly, are you able to prove the source of wealth? So if you've only ever told SARS for the last 30 years that you've been earning R5 a month, and you suddenly apply to send R10 million overseas, you're going to have some very good explanations as to where that money came from because it doesn't look like you've earned it. So I think there are two ways of getting that money overseas, Stephen, but can be easy if you're a taxpayer in good standing. Sometimes SARS is a bit busy, and then that special permission takes a bit of time. I think the one thing I want to talk about with this, though, is be careful of sending out lots of amounts all the time. In other words, the fact that you can send R1 million a year, don't suddenly now go and send 100,000 Rand at a time every 2 or 3 months because you want to smooth out the effects of exchange rate movements or something. Because every time you convert your rands into dollars or pounds or euros or yen or whatever it is, you are paying the banks a fair amount of money to convert your money into a different currency. So I think larger amounts make sense because at least you keep your costs down.
You also need to be aware of the tax implications of overseas money, right? I mean, it still attracts tax in some way.
Yeah, I mean, you will know that I'm a huge Warren Buffett fan. So the temptation for me and a lot of other Buffett fans is to all go and allocate some of our overseas money to buying Berkshire Hathaway shares, which, maybe it may not be a bad idea at all, except for the fact that those shares are listed in America. And what you need to know about America is if you die in South Africa as a South African resident, paying South African taxes, and your investments of American assets exceed $60,000, you are liable to pay the American tax authorities 40% estate duty on the amounts over $60,000. Now, there's a bit of a sliding scale, and it's complicated because we're dealing with America. But the point is, you could be in a position where you're giving away a huge proportion of your estate to the American tax authority, and you've never even potentially been there. So, and similar kind of principles apply, for example, to the UK, where the amount is £325,000, which is a lot, but still applies, and it can apply to a lot of other countries as well. So investing overseas when you're buying in hard currency and you're allocating money there is a very good idea, but you have to choose the domicile, which is just a fancy way of saying the home of that money. And you really want to look at places like the Guernsey, Jersey, Isle of Man, Switzerland or Ireland, because those countries are well regulated, but they don't charge these kinds of taxes on non-residents in those places.
Sure. Amazing what the Americans get away with. There's a question from Brahm for you this week, Warren. He says, I've just started my first job this month. My boss is telling me to get a will. Why? I don't own anything, and I have no wife or children. That's from Brahm. We'll have an answer from Warren Ingram, co-founder of Galileo Capital, in a moment.
The Money Show.
Personal Finance with Warren Ingram.
Warren's co-founder at Galileo Capital. And Warren, we had that question from Brahm. His boss is telling him to get a will. It's his first job. He says he doesn't own anything, has no partner, no children. Why would Brahm still need a will?
I just want to say I think Brahm's got a very smart boss. It's one of those things that's a real tragedy in our country where I think that no one's ever quantified it exactly, but it's comfortably more than half of all adult South Africans will die without a will. And when I do talks to people that are salary earners, and I ask them by a show of hands just to put up their hands if they have a will, it's very rare that it's more than half the audience, and those include parents, grandparents, etc. So Brahm's not alone in wondering why, and I think just to understand, if you're over 18 years old and you die without a will, what happens now is that the law says you've died intestate. That's the jargon for it. What it really means is now it's up to a government department, government officials, to decide what will happen to you and and by that I mean your body, like what will happen to your remains and what will happen to the stuff that you have. And if Brahm's saying he owns nothing, I'm wondering if he doesn't have a special collection of radio controlled cars or caps or rugby jerseys or whatever it is. Everybody owns something, even if it's not a lot. And now it's up to a government official in a department that's unfortunately notoriously not well run. It's called the Master's Office, and they're hugely overworked. And now they've got to decide, without knowing anything about you, how you're going to how your remains are going to be processed. In other words, are you going to be buried? Are you going to be cremated? And now you're stuck in a massive bureaucracy. And if you have anybody that cares for you, this is traumatizing for them. So, if you don't think you've got a lot of assets, that doesn't excuse you from not having a will. At the very least, you want to stipulate in that will what happens to the stuff that you do have. Should you leave it to your family or to a charity or anything? It doesn't matter, but at least write it down and make sure it's in a proper will. And then, really importantly, what should happen to your remains? Do you want to be buried? Do you want to have a religious ceremony? Do you want to be cremated? Those are things that need to be specified there, at least to know that on your death, the people that are left behind at least know, number one, what you want to do, and number two, that they have the authority to make it happen. And so I think it's a key thing. And at age 21 or 18 or whatever it is, when you start work, you might not have anything, but the reality is, if you do earn an income and you start accumulating assets, at what point are you going to decide then to have a will? And most people will forget this. So I think it's good practice for all of us to have a will as adults. And the reason I specify that is, if you die and you're under 18, at least your parents can execute their authority and make those decisions on your behalf. But if you're over 18, they don't have the authority. And as I said, the master's office is not run well at the moment. It's not a good place, and you just don't want to leave government officials to do this. Even with the best will in the world and the best intent, they're not going to get to this quickly, and they might not make the right decisions. So, Brahm, please get a will. You can go to a law firm. I know most of the banks will even do one for free if you appoint them as an executor. And that might not be the best will in the world, but it's way better than no will. And please don't try and do this as a DIY project, because there are some legal criteria around this. They have to be witnessed, and the witnesses can't be people that are going to be benefiting from your will. So there are some criteria around this. But get a will, Brahm, and everyone else that's listening, if you haven't got a will, maybe make that your second New Year's resolution.
It's also, despite some of the technical stuff, it's quite easy. You can sometimes get a will. You'd need to just check that it's the correct one, but you can get literally a blank one and fill it in. It's that simple in some cases.
I suspect so. I think in the old days you could go to kind of your local stationery shop and they would have some on template there. I think again it's better than nothing, but just make sure that you understand all the criteria, for what's required in a will. But gee, paying if you've got the money to pay someone to draft it, an expert to draft it, then do that. But if you don't have the money, just get one from the bank. At least it will be done in the correct form. And then maybe also importantly, you don't have to do anything to that will if you decide to change it in the future. In other words, if I write a will now in 2025 and I decide to update it in 2029, I can automatically, as part of my will, say that all the previous wills are now null and void, and this is the correct one. So it's worth doing and checking every 2 or 3 years as your life changes.
Warren Ingram, thank you very much indeed. As always, really appreciated. Co-founder at Galileo Capital, financial advisor, and of course, fascinating to hear about different ways to invest the money that you have.
The Money Show with Stephen Grootes is brought to you by Absa CIB, a Pan-African bank invested in your story and the potential it can unlock, because your story matters. Absa is a registered FSP.
Well, it seems in a way that what the world is counting down to is that first big inauguration speech by Donald Trump. And one presumes that in his first day, he may well issue a couple of executive orders around tariffs. And that's, in a way, going to be driving global markets, driving sentiment, and just also changing the way that American capitalism is going to be working. Well, that's something that we'll be focusing on The Money Show. Plenty to come, of course, from our economy over the next 24 hours as well. Plenty for us to chew over when we rejoin you tomorrow. So we'll be looking forward to all of that. Big day tomorrow. Much of the day is taken up by discussions by matric results. Tomorrow is the first day at school for almost everybody, particularly the government and most of the private schools going back tomorrow. Big day for our education system tomorrow. Looking forward to that. We'll be back with you tomorrow, hopefully a little more educated than we were today. It's 8 o'clock.